Hi everyone, today I'm doing my US stock market portfolio review and I'm going to show you my Giro and Trading 212 accounts and show you all the positions that I have, what I'm up on each position, what I'm down on each position. And yeah, I think I've been doing this series now for 5 years. So if you've been on the channel for that long, shout out to you guys. But yeah, always something that you can kind of just track along with and just see how everything's going. Position sizes, what I'm up on, what I'm down on, and obviously this is currently what I have as well. Like, this doesn't include any positions that we've sold for profit over the last 5 years. I believe I've been doing YouTube videos now with the stock market. So yeah, I think it's really good just to kind of keep up that transparency so you can kind of follow on. A little bit of difference now is that I kind of do it every 3 months rather than every month. I do it every month on the Patreon, but every 3 months I kind of update it on the YouTube and how everything's going, and yeah, share everything with you guys, and yeah, hopefully it's useful. You know, it's one of those that you know, you can see that I have skin in the game. I'm not one of these channels that kind of talk about a company then all of a sudden kind of, you know, sell it out in the background and never talk about that company again. You know, everything here you're able to follow along with how I'm doing in the stock market as well, which I think is pretty good going. And I'll try to spend a minute on each company and kind of give an update on where I'm at with every stock. Obviously some stocks that have been in here a longer period of time that are kind of getting to that 2 to 5 year ranges, you'll see are performing very well, and there'll be some newer stocks in here, some that are doing okay, some that have kind of gone down in the short term, and yeah, I'll try and give a little bit of an update into them as well. So if you could hit the like button, if you do want to join the Patreon where I do the monthly update rather than every 3 months, the link is in the description, as well as that I post when I'm buying and selling all of these companies as well, and also there's 2 exclusive videos a week on there, and some of those videos are like tips and tricks for how I've learned to kind of build a successful portfolio as well, and there's a Discord on there with 600 members. But we'll get stuck onto my Giro portfolio to start with, and I'll try to spend a minute on every company and kind of do a little bit of an update on all of them. So yeah, going into the Giro portfolio, starting on here, Alibaba up at the top. So this is actually not the Alibaba position that I've been buying recently. This is the Alibaba position that I actually started buying in 2018. What happened in 2018 is there was a Chinese stock crash, pretty much what's going on right now. Stocks fell off a cliff, started buying Alibaba. And since then, Alibaba went up to $300 a share, and I actually sold half of that position off. Took some good profit, and I thought I'll just keep the other half. But since then, what's happened is Alibaba's pretty much gone back down to the prices it was at 2018. So it is crazy to think that position was at one point up like 100%, and now it's actually down on position. But at the same time, it's a good kind of reminder that we are back to where we were in 2018. And last time I had that position, it went up to being up to nearly 100%. Took some good profit, and now it's back down there again. So yeah, kind of had that for a little bit, and it's a good reminder, I think, to have that one there. Next up, Carnival. So I'm down 19% on this one. A lot of you guys that have been on the channel for a long time, you'll know that I actually bought this in 2018 as well. Looked at this as a bit of a dividend play, looked at the cruise lines that were massively sold off, and yeah, it was doing steadily okay, not too bad through 2019. We get to the start of 2020, and yeah, there's a massive pandemic. Obviously, Carnival's affected absolutely huge, and it falls off a cliff. I was down 80% on the company, and it's now 19% down. It's nearly to break even. Break even is where I'd sell out. I'm just going to take that as being flat on that one. But it just shows you, you know, at one point I was down 80% on that one. Fundamentally, things changed with that, but I looked at it and thinking, what's the point of taking an 8% loss on it now? You know, it's a company that, you know, if I sold out, then I would have to then, you know, double my money and then double it again and then probably double it once more to kind of get my money back. And I thought, you know what, Carnival, you know, it's probably not the value of what I bought it at, but I still think I'll get, you know, a good $25 for it. So I just, you know, bought a little, patience, and I think I will get out break even with that one. Dropbox, so I'm up 47% on this one. It's had a little bit of a pullback this month. I believe I was up 60%, I think, previously on it. Dropbox was a stock that I think I bought towards the back end of 2019 as well. And yeah, I just looked at it thinking it's a very good valuation. It's in the cloud, it's starting to put good profit in, it had a very good balance sheet, the CEO started buying a lot of shares heavy. Thought I'll just buy that. I see this being 100 to 150% return. Currently up about 50% on that one. So yeah, if I can get around to 100 to 150% on return on that one, I'll be happy to kind of sell that one out. Facebook. So Facebook here is this one. I think I started buying this one 2018 or 2019, mostly bought during the Cambridge Analytica period. It was a stock that we were actually up 100% on. I never have any plans to sell Facebook just because I think it's an amazing company in the next 5 years. But it has had a bit of a pullback because of what's been going on with Facebook recently. And yeah, I'm just happy to kind of hold that one for a while. But that is a position that I've had for a good couple of years now. Next up, quite a big chunk you'll see nowadays, which is Gang. Gang is currently down 11%. I'm a massive fan of this one. I think it's massively undervalued. I think that it's obviously a new position, but I think I'm fully built on this one, and probably that when it does go up, I'll probably rebalance that position a little bit and probably sell a good 20% chunk on it. But I just bought Gang. I think the valuation is absolutely nuts. It's the same price as when it came onto the IPO about a year and a half ago. Since then, it's grown revenue at something like 20% and now 130% this year, and then whatever they grow at the year after. So yeah, and they've had major contract wins in that time. So for me, Gang is the one stock that I am massively bullish on, and the only thing I want to be really careful of is not to make it up any more of the portfolio. But yeah, I think that is due a good run. Next up is Huya. So yeah, once again, this is kind of a newer position, but it is starting to get towards being in the stock market portfolio for a year now. So I would like to see this start to kick on, but it's just got caught up in a lot of the Chinese stock crash. February, it was a stock that was $27 or something, and now it's like a $9 stock. And I look at the company, has anything fundamentally changed? You'd think the profit has fallen to like a quarter of what it was, and it's actually grown 100%. It's bonkers. Once again, it's probably the stock that once it goes up, I probably will rebalance the position size a little bit. But it's a newer one, but I would like to start to see that one kick on a little bit going forward in the future. Next up is JD.com. This is a company that I've owned for about 3 or 4 years now. Once again, one that I bought in the Chinese stock crash. Done very well. I've sold half my position off in that time. Took a nice 300% gain on it, and obviously it's like a lot of Chinese stocks, it's had a bit of a pullback, but even with that pullback, it's still up 271%. So Microsoft, this has been in the portfolio, I think, since 2017 maybe. So yeah, it's been a good 4 or 5 years ish. It's one of the longest holdings still in here. Pick up a really good dividend. I first started buying Microsoft at around $60, and now I've averaged up to about $100, and I'm up 151% on it. And just good dividend, great stock, and it's like a Facebook. It's one of those stocks that I probably will never sell because it's such a good company. Pinterest up 113%. Sold a little bit of this one, but still got a little bit here in this the portfolio, and I still think it's got a very good future. TDoc, a company that I've started buying, which is a new one for this year. I started buying this recently. I've been a bit more of a bigger fan on HIMS, and I have been looking at TDoc, and I'm not sure what my game plan is exactly with it. I think I will get some share price gain, but when I do look at the current valuation of TDoc to HIMS, I do prefer HIMS over TDoc. So yeah, I'm not sure on that one. I think it does have a lot of potential, but now that I'm starting building a HIMS position, it could be one that I maybe sell out of and kind of focus a bit more on HIMS really going forward. We'll see. That's something that I'm kind of thinking of in the background. And then Visa, once again, just a solid position for the portfolio, up 30% on that one. And Walt Disney up 12%. I actually started buying that one back end of 2019, the start of 2020 before the CV crash, so probably the worst time. I was actually down like 60% on that one at one point, and it just shows you, you will go through crashes, and that would, that could have been easily a stock that I panic sold out of, probably one of the worst stocks to be buying before a pandemic, one that relies on a lot of tourism for the parks, but it's recovered it all. And that's just because I had such a belief on what Walt Disney is. It's a great brand. So yeah, overall, pretty good, happy with the portfolio. Some good performers. Facebook was 100% return. JD.com, Microsoft, Pinterest. So I mean, there's like 400% returns still in the portfolio. Like I said, I'm not sure on what my plan is exactly with TDoc at the moment. kind of all if I can get out break even, I'll be happy with that one. And yeah, I'd hope Gang and Huya kick on within the next few months now, which is what I want to see from them too, especially Gang. So yeah, that's everything with the Giro portfolio. And now I'm going to flick across to my Trading 212. So this is my Trading 212. This is a combination of my Invest and ISA accounts. Yeah, we'll start from the top. So we've got Alibaba. This is the new position that I've been buying with a current dip down 10%. Beyond Meat down 10%. Now this Beyond Meat's been really weird. This is a company that I've been buying pretty much since the start of this year, so it's a bit of a newish position. It's been doing okay. I've actually sold some Beyond Meat shares for a good amount of profit, but the last few months it's just fallen back off a cliff. No idea why, because financially the company is actually performing very well again now. The food service is coming back, and that was evident in the recent earnings. The food service was up like 200%. So yeah, no idea why this is down really. If anything, this should be now up probably 30-40%, and I think that hopefully when we get the new earnings, people can realise like, oh, it's still very good. So we'll see what happens there. Corsair, once again, this is a newer position, currently down 6% on that one, so not much really. I think that this is kind of Wall Street are a little bit unsure that if it's just a CV stock, but I believe it'll be a fantastic stock for the long term, and I see that doing very well. DraftKings currently flat, we're down 1%. It's my new biggest position in the portfolio, and yeah, I'm really excited because we are coming up to the NFL season, and that's going to translate into DraftKings putting amazing earnings out, and I think that could see it go up a crazy amount. And then we've got EHang. EHang's just a spec position, very small. Just went if lock it away for 5 years, see what happens with unmanned drones and everything. If they kind of kick on in the next 5 years, EHang are the number one players, and I'll look a genius, and that'll be up a crazy amount. So yeah, a little bit of a risky play that I'm just kind of keeping a small position and see what happens with that one. And same with FinTech, another kind of spec play in here. Yeah, I've only really got 3 spec plays, which is EHang, FinTech, which is eToro, and Planet 13. Looked at that one, thought they're absolutely smashing it. They're doing very well, a lot more retail investors recently. Looked at the valuation of Robinhood, thought FinTech deserves to be a lot higher. And yeah, I only playing that one for a little bit of a smaller game, really. Hasn't really worked out as much as what I thought it would, but I still think that I can get a little bit of a gain on that one. Facebook up 64%. Yeah, that's probably one of the ones that I prioritised to buy in the CV dip. And yeah, it's doing okay. Callaway Golf up 2%. This one's actually pulled back a bit recently in the last kind of couple of months, but still a massive believer in that, and Top Golf. And there's my newest position, which is Hims. You'll see that I've been buying that really heavy. I didn't really have too much of a big plan to buy it heavy, but my ideal situation was if Hims gets into the $7 range, I'll start loading the boat. And started buying a lot of Hims there, and yeah, up 2% on that one at the moment. Wouldn't mind it to stay a little bit flat, so I can just build that position a little bit more than what I have done. And then InMode up 406%, being a very good performer in the stock market portfolio. One time was my biggest position until a stock called DraftKings came along. But yeah, it's really good. I think the big thing like with a stock like that is that I think in the next 5 years it'd probably be up 1,000%. But it's one of those is that there's a famous quote from Peter Lynch, and he says like basically, if you have a stock market portfolio and you have 10 stocks in it, you can have like 4 stocks that go down, you can have 5 stocks that give you up to 100% gains. But if you have one stock that hits that home run and is a 10 bagger, which I think InMode will be, that absolutely helps your stock market portfolio outperform the market. I can't remember the exact sort of numbers, it's worth checking up, but InMode single-handedly is smashing it, and it's been doing very well, and they've actually brought recent preliminary earnings out, I think it was yesterday, and really strong again. So yeah, I think that will be probably 1,000% return in the next 5 years, which is great. Planet 13, which is my last bit of spec play, kind of getting a bit of a MJ play, and I think they'll do very well over the next 5 years. Been a bit down recently, but so it might be one that I consider buying sometime soon. Shopify up 22%. Yeah, just happy to kind of keep holding that one, and I'm sure it will do very well. The numbers have been very good from that one. Skills, I've been a bit reluctant to average into this, just because I don't want to make it a major position, because it has that risk because of how much money it loses, but I still believe in it. I have been nibbling just a little bit. I'm down 36% on this one. I have made some good money on it already this year, but recently it's just been down to $8, and I think this was like a $45 stock at the moment. At one time is absolutely bonkers. So yeah, a lot of fear around there with Skillz at the moment. I am thinking about buying more, but I don't want to commit too much of the portfolio to it. Square up 13%, just a nice little payment company to have in there. Tattoo Chef up 3%. Yeah, big fan of this one. I think when you look at the portfolio, you can tell which ones I'm, ultra bullish on in the next kind of period, which is like your GAN, your DraftKings, Corsair, Tattoo Chef, even a little bit Beyond Meat. You can see that in the position sizing. Tesla up 31%. It's actually had a very good month at the moment, Tesla. There's been a little part of me going, do I just take that now and put it into some other great opportunities out there? I'm not going to lie, but yeah, I still think that the next 5 years Tesla is going to smash it as a great car company. Turtle Beach up 52%. Yeah, I've been very often thinking about selling Turtle Beach and putting it into Corsair, but my game plan was always to sell it in the spring of 2022, and also I think there's potential that a buyout happens. If a buyout happens, that'd probably be a premium on that, and I'd probably end up walking away with nearly 100% return on it. So yeah, either Turtle Beach is probably going to get bought out in the next few months, or I will probably sell that in spring 2022, and potentially move that into Corsair. Just because it's a bit more with gaming, and I think like we've had a gaming cycle, and that will probably slow their sales down, whereas a Corsair will be PC parts that's strong all the time, doesn't have a gaming cycle really. Visa, once again, just a good diverse one for the portfolio, up 10%, and Walt Disney up 54%. So yeah, overall, pretty happy with this portfolio. It's not been going as long as my Giro one. My Giro one's still got a couple of stocks that have been in there, like for a 5-year period, where my Giro one is only kind of like 2 or 3 years old. So there's not too many long runners in this one really, but overall, yeah, I'm really happy. There's a lot of stocks that are performing quite well, and you'll see that it's a lot of the big tech as well, because that's one's been performing. So the small caps would be good for them to start to kick on in the next few months. And yeah, I think it's all set up very well in the next few months to do good. I think the likes of DraftKings, I think when you consider the NFL season coming up, Corsair, I think that's is set to do very well in the next few years. Tattooed Chef, your likes of Beyond Meat, for example, Hims. Yeah, I look at the portfolio and I'm really happy with how everything is. You can see, obviously there's stocks that are being sold for gains, but there's a few stocks here that have been in here for a longer period of time that have performed really good. And you can see like the newer stocks that are coming in, and sure, some of them are down a little bit in the short term, some of them are doing okay, but you can see where the positioning for the next kind of couple of years for the ones that I think will do very well. So yeah, hope you enjoyed it. Hope you kind of enjoyed me sharing the update with you guys and how everything's going. I can't remember if there's been any changes since I last shared it on YouTube. I only kind of remember it from the last month, which was on Patreon. Obviously, you probably know like the likes of GNOG's has gone out of the portfolio, which was like a 50% gain. I think the only other one that I've sold recently was Boeing, which was like a 80% gain. So yeah, there's Boeing and GNOG that have only recently exited the portfolio, in case you missed them. But yeah, overall I think that is everything, unless I've missed anything. So yeah, I hope it was useful, and like I said, I'll update you again in 3 months. If you do want to get it on a monthly basis, make sure you join the Patreon, and if you do want to start investing, there's some links to some brokers in the description like Freetrade. Join through there, you get a free share as well, and I'll see you on the next video.